Good afternoon, everyone. Thank you for joining us today. I'm Lauren Smith with the International Franchise Association, and we have a great 30 minutes lined up for you. Before we begin, I would like to let everyone know that we are recording today's session, which will be made available later this evening on community.franchise.org. If you have any questions for today's speaker, please drop them in the chat box below for our speaker to address toward the end. Today's topic is tips for automating your sales tax and is brought to us by Davo by Avalara. Here to provide today's discussion is David Joseph, co-founder of Davo. Thank you, David, for joining us today, and thank you, Davo, for sponsoring today's Lunch and Learn. I'll go ahead and turn things over to you.
Hey, thanks so much, Lauren. Good afternoon, everybody. Pleasure to be here. So as Lauren said, we are Davo by Avalara, and we do sales tax automation. And while this seems rather mundane and not the most exciting topic, it can have long-term implications for businesses when they mismanage sales tax. So just before we dive in, let's take into consideration a couple of these things that can affect a business long-term, and a few things to consider. We look at sales tax and merchants as reluctant tax collectors. They did not go into business and open a franchise to collect taxes for the government. Let's face it. This is a job that is kind of thrust on them by the federal and state government. Yet mismanagement of sales tax is one of the leading contributors to small business failures. And this goes for franchises as well as independent businesses. So it's important to manage it as a contributing factor in businesses closing. This is something that businesses should pay attention to. Another factor to consider is that merchants gain zero benefit from being a tax collector. This doesn't bring them more customers, doesn't buy them more inventory, it doesn't hire more employees, it does not contribute to their bottom line in any way, shape, or form, yet it costs them money to manage. And managing sales tax is a manual process. There is no way to automate this. There hasn't been a way to automate this in the past. And manual processes are time consuming. They cost resources in both time and money. And honestly, I actually find it absurd that in living in a digital age as we do, people are still doing this manually. And so Davo has set out to solve these problems. Let's just first make sure we're all on the same page and have an understanding of what sales tax is. Sales tax is a state tax. This is not a federal tax. It doesn't get paid to the federal government on April 15th. Instead, it gets collected by merchants from consumers, and it gets remitted to the state government monthly or quarterly. Merchants have this legal responsibility to collect sales tax, and quite often, they really don't understand the process. And most importantly, they actually don't understand their legal responsibility as to ownership of sales tax. So for instance, if you have a $4 cup of coffee and you're using a point of sale that calculates the tax rate, let's just say it's 8%, the merchant's going to collect 32 cents and the total sale will be $4.32. And this is what gets deposited as part of the merchant's batch into their bank account or as part of their cash deposits. And human nature, it's in my bank account. I can use it to run my business. But technically, this money actually belongs to the state, and the merchants have a legal responsibility to hold it harmless and secure. And this is where merchants actually get into trouble of using sales tax revenue to run their business. It is a cash management issue. Sales tax gets deposited into the merchant's bank account. Payroll comes due, the van breaks, they need to make a payment for some other essential service in the business, and they use sales tax revenue to do that. And this is how merchants get into trouble. So it's a cash management issue. The second big issue is actually the frequency with which merchants have to remit sales tax. Again, this is not something that's remitted once a year. This is monthly or quarterly, and that takes time and planning. Missed sales tax payments have excessive fines and penalties. Most states, 20 to 25%. This is a huge penalty that again comes directly off of the merchant's bottom line. So you notice there's one more bullet point in there. Restaurants double paying sales tax. So if you're a food service industry and food service business, and you're using third-party delivery apps or marketplace facilitators, as they're now called, Uber Eats, Grubhub, DoorDash, you run the risk of potentially double paying sales tax. Both you're paying it and the app is paying it. We're going to discuss this a little bit more later on, just so you have a little bit of an understanding of how merchants can really get into trouble and overpay sales tax if they're using these applications. So Davo solves these problems that we've identified, the cash management problem. Davo actually sets sales tax aside daily for the merchant. So the money is not in their bank account to get used as working capital. Frequency of return filing. Davo automatically fills out the tax return and files and pays on behalf of the merchant. They don't have to think that their sales tax is coming due. Excessive fines and penalties. Davo gives a guarantee that sales tax will be filed and paid on time. If we pay it late, we will pay the fines and penalties. Okay. So we are solving the problem of sales tax. How do we do this? Well, the first thing a merchant does is connect their point of sale to Davo. We work with a number of point of sales. These are all cloud-based, but they are the majority of the leading point of sale platforms being used in the marketplace. The connection process, very, very simple. Merchants do it themselves, takes literally 3 or 4 minutes, just a few pieces of information, and the merchant's point of sale is then connected to Davo. This enables us to see transactions all day long. So we see that $4 cup of coffee being sold. We see 8% tax or 32 cents of tax on that cup of coffee. And this is the total transaction. Davo is highly accurate because we are working at the transaction level. It doesn't matter whether the transaction is credit card or paid for with a credit, debit card, cash, check. We see the transactions. We would see a gift card sale as a non-taxable sale, yet when the gift card is redeemed, it will be a taxable sale. We will see a refund as a negative amount of sales tax. So working at the transaction level, we have a high degree of accuracy in our process. At the end of each day, we look at all the transactions, we total up the exact amount of sales tax collected by the merchant, and we issue a debit request to the merchant's bank account, transferring the sales tax from the merchant's bank account to Davo's tax holding account. This is the same model that's actually used by payroll companies of setting aside payroll taxes. However, we do it more frequently. We do it on a daily basis. So we look at the transactions, we set the sales tax aside daily. Every morning, we send the merchant an email. We tell them exactly how much sales tax they collected the previous day, just so they know that we are doing our job and that it is accurate. When their sales tax is due at the end of the filing period, we actually do a reconciliation. We go back to the beginning of the tax filing period, collect the data again, and compare it to the data we have collected on a daily basis. This reconciliation ensures that the POS system did not go offline anytime during the tax period. We then fill out the merchant's tax return, file with the state, and make a payment to the state on the merchant's behalf. So what you will notice in this process is that once the merchant connects their point of sale to Davo, they are done. They don't have to do anything. This entire process works seamlessly in the background, collecting data, setting tax aside, and then filing and paying it when due. I just want to stop here and see, are there any questions, comments, concerns about the Davo process? All right, no questions? Let's move on. So additionally, Davo creates a dashboard for the merchant when they sign up for an account with us. This dashboard does some reporting to the merchant as far as their net sales. This would be their gross sales minus sales tax. The sales tax is also shown there. is, you'll notice in the middle, this is the status of the daily debits from the merchant's bank account. So they notice that they're pending there. Once they have cleared their account, they will be switched over to settled. We also store the merchant's tax documents. Merchants are required in all states to hold sales records and tax documents between 5 and 7 years for states to come in and do audits. We created the dashboard so merchants have a place to store their documents and sales records, clean books and records. States can actually fine or penalize a merchant with having sloppy books and records. And so we store all of this data in one place. It's also great if you have an accounting firm who at the end of the year would like to audit the sales tax payments. Everything is in one place, neat, cleanly stored for the merchant. So Davo is, as I mentioned, is an automatic process. We take what had traditionally been done manually and convert it to the digital age using data to automate this process. We can do it more efficiently, reducing risk and guaranteeing payments are done on time. And it's only $50 a month with no long-term contract, and we give them the first month for free. So there are a number of benefits to Davo. As I mentioned, this is automation where traditionally sales tax was done manually. If you look at Davo compared to the traditional way sales tax has been done, either by bookkeepers or accountants, or a merchant doing it themselves, there are clear benefits to automating sales tax payments. As a franchisor, you certainly want your franchisees selling product out, whether it's selling coffee or selling chicken, and not in the back office managing taxes as another task that they have to do. And this becomes a value-added service to the franchisee, automating this process so they don't have to either spend more money on it outsourcing or risk missing a sales tax payment. There are 26 states that actually offer a refund for paying your sales tax on time. If you're fortunate enough to be in one of these states, Davo actually calculates this refund and remits it back to the merchant along with their a copy of their tax return when we file it. So I mentioned earlier, third-party apps actually create a lot of confusion for anybody in the food service industry who is using these apps. And we do have a bit of advice on how merchants should negotiate this. And the first thing being that they have to understand who is responsible for collecting and remitting sales tax. This all goes back to a Supreme Court decision a couple of years ago called the Wayfair decision, where states are now requiring what they call marketplace facilitators to collect and remit sales tax on behalf of their orders. Yet not all states have adopted marketplace facilitator laws. So in some states, the third-party apps, Uber Eats, DoorDash, and Grubhub, and many others are collecting and remitting sales tax on the orders that they are processing. In other states, they are collecting the sales tax as part of the order and then remitting it to the merchant. And the merchant is then responsible for remitting sales tax on those orders to the state. So the first thing the merchant has to understand is who's responsible for collecting and remitting sales tax. Is it the third-party app or is it the business? And there are two different ways of setting up a point of sale to manage apps. And we're happy to advise merchants and help them get their point of sale system set up. We have created a white paper around this to assist merchants in getting their point of sale systems set up to manage third-party apps. And essentially, once the point of sale system is set up to manage sales tax, it works the same as it would whether they're using an app, the third-party apps, or not using the app. So it's quite easy to use and easy to set up, and we're happy to assist in merchants doing that. So who should be using Davo? Restaurants, food service. This accounts for, sorry about that. Not quite sure why that's on my screen. Quick serve restaurants or restaurant and food service account for about 65% of our merchants. These are complex businesses, labor intensive, high expenses, low margins. So any way that they can create efficiencies within the business will save time and money. So 65% in the food service business, retail, any type of retailer who is not shipping goods or have an online store. So florists, liquor stores, any kind of retail, again, tangible goods, selling tangible goods, and then service industries such as automotive, salon, spa, fitness. Many of these businesses have small tax liabilities, but complex to manage, and we have a lot of them as customers. So again, service industries, retailers, and food service. So I just want to touch on a couple of things that large organizations like Pliables, which is a franchise and company-owned organization. I think they have 70 or so company-owned stores, 100+ franchises. And the CFO really says exactly what I've been talking about, that, you know, it's another task that merchants have to do. They're required to do this, but why spend valuable time on it when there is a solution out there? We are looking to create efficiency for our businesses while reducing risk and making sure that sales tax gets filed and paid, and that the business grows and thrives. You know, this is, again, a large organization, multi-unit. Remembering to file and pay your sales tax for all of our entities, it's a tedious task. And this allows us to spend time on things that are beneficial to the business. Again, does not contribute to the business's bottom line. I was recently speaking with an 8-location pizza chain in Massachusetts, and she was telling me that due to COVID, 2 of their restaurants, the catering hall and their fine dining restaurant, had actually shut down, and she had to cut her staff by 2 people, and sales tax was taking an inordinate amount of time for them. And she was happy to be able to outsource it and not have to think about it, so they could get on with the things that were more important to their business. We have amazing ratings online. I encourage you, go look at the reviews of Davo and you will see why. People tell us everything from life-changing to extending their life expectancy. We come to work every day knowing that we're making merchants' lives better. You may have heard when we were introduced, the name of our company now is Davo by Avalara. Previously, we were just Davo. We were acquired about a year ago, and Avalara is a publicly traded company. They're primarily focused on e-commerce and mid-market, although there are a number of products that they offer and services that they offer that will eventually be stitched into Davo that are of interest to multi-unit operators. This would include things around tax rates and injecting tax rates into POS systems. These are all things in the pipeline for Davo, but again, it gives us access to a greater catalog of resources to help our merchants and help our customers. So we are huge supporters of our partners as well as our customers. We offer bilingual support in Spanish and English. This is unlimited as part of your monthly subscription. You can call into our operations team. They are all US based. We offer live phone support, chat support, and email. And I'm also readily available to work with clients, and I do this throughout the day and throughout the year, helping them create greater efficiencies in their business, and basically automating parts of their back office that enable them to get out and make their businesses grow and thrive. I think that's what we have for you. Do we have any other questions about Davo, about sales tax in general?
And David, there is a question in the chat from Richard asking, does this service work best for multi-state, or do you see the same value for a single state sales tax situation?
Interesting question. Thanks for asking. It depends on how the business is set up. So sales tax in a multi-state, you always have to file separately in each state. So let's just take, for instance, let's say you have 20 locations and you're in 5 different states. Each location is a separate entity. Your accounting department would have to file 20 different tax returns for each entity. And it could be they would have to file 20 tax returns in multiple states. Some businesses are set up to file one tax return for multiple locations in one state. But as soon as they go into another state, they would have to file a separate tax return for that state. You cannot file one return for multiple states. Every state does require a separate return. And it comes down to how the businesses are structured. We work with franchises that have 80 locations. Each one is a separate entity. We work with franchises that have 10 locations and they file one return. So it really depends on how the businesses are set up from the beginning, but just keep in mind that every state you go into, you're going to need to be licensed and you're going to have to file a separate tax return in that state. The other thing I forgot to mention is that many states have, you may have multiple tax returns due in a state. You may have a state tax return, a city tax return, and potentially a county return. The city of New Orleans has state of Louisiana, the city of New Orleans, the parish, and then for businesses in operation more than 1 year, exhibition tax. So you have 4 tax returns to file per business in just New Orleans. Davo files up to 3 returns per month per business. So if you do have a local jurisdiction, we will file the return as long as this is an electronic return. Just about every district in the state and in the US now has gone to electronic returns. There are a few that are still doing manual returns, and we have a special way that we handle those. But for the most part, the electronic returns, and we'll do 3 per business per location per month. Any other questions? Nobody wants to ask, where do we put the money? Where do we hold it? So our holding accounts are at Wells Fargo, and these are secure tax holding accounts, and they have bank level security on them, and they have frequent penetration tests. So we do a good job of managing people and holding people's money for them.
Awesome. Well, great. Well, if that's all the questions we have, thank you so much, David. This was excellent content and excellent feedback from all of you. We really do appreciate it. Again, this recording along with the presentation deck will appear later this evening on community.franchise.org. Thank you again to David and the rest of the Davo team. Have a great rest of your day and stay safe and healthy. Bye.
Thanks, everybody. Bye-bye.